G'day, everyone. Good evening. Welcome back to those that were here on Tuesday night. Great to see some familiar faces in the room and really good to see some new faces as well. Fantastic. And for those online joining us, we've got a few people online. Great to have you on board as well. Before I get going, I believe there were some issues or problems people had trying to download our workbook and the recordings. Is that correct now? And you can now, you'll be able to get those through our Teams invite. I believe they're on the bottom of the Teams invite and the reminders that have gone out as well. So those are there. So folks, great to see you back here for Startup September 2025 Session 2, Feasibility, Will My Business Work Part 2. So great to see you all back here for that. On Tuesday night, those that were here or online, you would have seen we really focused on market research, understanding the market you're going to be playing in, understanding your customers, your competitors, but do you have customers? Who are your customers? Where are you going to find your customers? And all that side of starting up your business and understanding. Really important. Tonight we have another really important aspect for you, for your business, and it's financial feasibility, and I don't think I have to try and convince you that that's important, right? Financial feasibility, very important aspect, and you want to get it right at the start. So we're going to be looking tonight, we're going to have focus on understanding startup costs, understanding cash flow projections, and price setting. And you, probably most of you in the room, if you're starting up a business, you're going, what am I going to charge? What can I charge? What should I even charge if I'm going to stay viable as a business? It's a very important part. You want to get that right. So that's part of tonight. Business structures. What's the best business structure for you and your business is also going to be touched on. And then I think I'll have a little cameo presentation, if you like, on licenses and regulations. Not a sexy part of doing business, guys, but it's a vital part of doing your business. So we'll be touching on that. And then that's going to be topped off tonight. We've got a really good business showcase, and I'm really looking forward to that myself as well when that comes up. We've got Prabin's here from Duke's Cafe and he's going to tell us his story, so I'm looking forward to that. But to get the ball rolling, first off we have Ali Dhirani, correct me if I get it wrong, from SAMF Consultants. Very qualified to be able to speak to you all about financial feasibility, and we're really excited to have him here tonight to be able to tell you all what's needed there. So please welcome for Dhirani, for Ali. Yeah, for the recording.
Right, perfect. Yeah. Thanks, Grant. Hello, everyone. My name's Ali Dhirani. I'm from Tanzania, and I just realized that there's a few South Africans in the group, so this wasn't planned. So there's a little bit of African Union happening. Now, a wise person said, if you love your numbers are going to love you back, right? And as accountants, that's what we do for a living. Now, what I've tried here is to make the presentation as engaging, as straightforward, very clear, because not everyone in the room is an accountant. And for that, we're going to make it a very, very informal conversation. I want questions from the crowd. Raise up. I'm sure there's business owners here, people who are into the business already, have started their business already, or are planning to start their business. It doesn't really matter what part of life or what part of your business you are in, because any of this information will still be beneficial. You guys all know my name, but as part of returning the favor, if we can just go around the room real quick, your name and what business that you're doing, because I'd like to use the examples from the group, from the team, and see how we can work with your businesses and set prices for your businesses. All right? So we'll obviously start off here. Just your name, and obviously we know you're Duke's Cafe.
Prabin from Duke's Cafe.
Awesome. So I have actually a good couple of things for the cafe. So I'll probably, go back and forth, and you tell me if it's all good or not. Yep. Yeah?
Hi everyone, I'm Justin Crawford. I want to do solar panels and batteries.
Wow.
Rusty for short. Rush Dean's my name. Rebecca's partner, but just trying to start up something. Not sure yet what it is, but I'm a hands-on person, so give it a go.
I'm Rebecca. This is actually my husband, who downplayed. We're tired. I run No One Left Behind, which is a human rights events company, but it's got to the point that it needs to possibly roll into not-for-profit, and I need to separate into a company that actually makes the money. So, yeah.
Awesome, great. And we are going to talk about structures,
Yeah.
and also that's going to be an interesting part. So great, thank you. Yes.
My name's Tiffany Brown. I'm deaf, and I just started a business called SAMF. I support deaf clients and all in Australia as well. So one-on-one support, community access. Haven't really broken down what my business does, and I'm still finding my feet.
Awesome, that's no worries at all. And let me know if we need to repeat some stuff or whatever I need to do, to make this more accessible to you. Please, thank you.
Hi, I'm Rhonda. I've got an invention in the Muay Thai and boxing arena.
Awesome, I'll stay away then.
Ronda Rowdy as opposed to Ronda Rowdy.
Yes.
Hi everyone, I'm Pauline Costa, and I'm trying to bring a new activity in Darwin in the circus field.
Wow, amazing. Great, thank you.
I'm Clarissa, and I'm looking with my friend Kim to open a retail boutique.
Wow, yeah, we're going to talk about boutiques as well, so good stuff.
My name's Jess. I'm looking at, not quite sure yet, but maybe a bit of an art space in my area.
Great, awesome.
My name's Robert, and yeah, I'm not sure about my business yet either, to be quite honest. So yeah, something in the legal education thing.
Great, amazing.
I'm Jo. I'm planning on creating a point-of-sale system that also acts as an AI system, targeted for the beauty industry, freelancers, sole traders, and yeah.
Amazing, we should talk, because when you're into the AI and into research and development, there's actually federal grants for specifically research and development,
Okay.
So yeah.
Hi everyone, I'm Christy. I've had a dance studio for the past 10 years in Darwin, Rick's Kicks Arts, and now I'm starting a new skincare line called Veil and Flame. So thanks for having me here.
Awesome, thank you.
Laura, I'm bringing to fruition a long thought out and planned business of camping and picnic hire.
Wow, amazing. So as you can tell, it's a wide variety of businesses around. So let's see if we can accommodate everyone, but I'm sure the numbers are same, it doesn't really matter. What is financial feasibility, right? Will my business work in very layman's terms? But it's the process of evaluating whether your business idea, because everything that we starts off with an idea, right? We come up with so many ideas every single day, and we're like, oh, this is gonna be great, let's jump onto it, without even realizing that the ground that we're landing on is flat or not. And what does it do? At the end of the day, you have to, and I tell this when I do my cash flow workshops, cash is king. When you're running a business, you're there to make money. But if you would like to do something for other people, and I'm sure that all of us have those causes and have a purpose behind why we're doing what we're doing, remember that we're not able to fulfill our purpose if our business is not generating profits. Right? So if no one left behind is doing some amazing work out there, but if it's not able to generate profits, then there's no point of running the business, right? So coming back, the whole idea of financial feasibility is to see that bottom line. Is our business going to be making money? Or if we haven't done it, is our business making money? Because sometimes, and again, this is something part of our cash flow workshop, we talk about assets and liabilities. A balance sheet of a company that some of us who already have businesses in operation may have not even had a look at our balance sheets. So this is everything that we're going to talk about during this course of a few workshops. Why it matters? It prevents costs, attracts investors, and it guides smart decision making. A few stats. 80% of businesses that started in 2024 went bust. Almost half of them went bust, not because they did the wrong thing, but just because they didn't do the proper planning. They didn't account for taxes, didn't account for GST, and all of that leads to liquidation, leads to small business restructures, which is obviously not a great thing in our personal lives, but also in our commercial, in our business life. So like I say, the first thing, as soon as we have something that strikes, I think we can do this, Circus is a great thing to do in Darwin. There's so many kids. Amazing. It's a great idea. It's a great project. It's a great concept. What do we do next? And this is where a lot of businesses that I've consulted with, the first thing that they go into is how much is the business going to make? Straight away. Well, how much are we going to sell? How much are we going to make? And that's the number one step, in my opinion, as an accountant, that perhaps should be the third step after the idea. And the first thing you need to do is identify your costs. What are your startup costs? And obviously we're going to talk about fixed costs, variable costs, and what are your operating costs? Because yes, sometimes I have businesses come to me, they've got an inheritance, they've got $100,000, $200,000 from their family, and they want to invest it into the business. Great. We start off, we pay the lease, we get a rental agreement, get all the fixtures and fittings done, and now we don't have workflow. So obviously when the first business talked about customers, making sure you know your market, all of that works side by side to what we're going to talk about right now. Once you identify your costs, the next thing you do is you project your revenues. How much am I going to make? What is the market looking like? How many can I sell? Now, Duke's Cafe, I'll take this as an example if that's okay. If Duke's Cafe creates a projection of selling 100 cups a day of coffee, it's great. But is 500 cups a day realistic? No. Is 1,000 cups realistic? No. Because for that particular area in the population that we live in, our day-to-days all are an external factor towards deciding that costings and deciding that revenue. And then doing your analysis. Yes, I've done my costs. This is how much it costs me. This is how much it's going to take me to run. This is how much I'm going to make. But is it going to work? Are your revenues equal to your expenses? Or is your revenue higher than your expenses? Or your expenses are higher than your revenue? Because yes, there could be a whole demand. There could be so many people out there who would like to engage in that service, but there could be same time competition, right? The market can be very, very saturated. And because of that, the expenses are the same. But then the revenue is going to remain the same, or in some cases, because of competition and because of how Darwin particularly is the market, I've also seen that people have projected very high, but then once they start looking at their numbers, the revenues are not going high. They're actually going backwards. And if we don't pick that out within that first month or within that first quarter, we're going to be going down the rabbit hole. And then obviously the last thing is your decision. Because everyone has great ideas, right? Everyone's idea can work. Once we do this, whether we go ahead, which is a great scenario, revise, or drop the plan. Now, when I mean drop the plan, I don't say don't do the business. Look for other ways of how can this business work. And this is where you bring professionals into play. Look, I've done my analysis, I've got my costings, I've got this, but now I'm stuck. It doesn't look like this is going to work. What can we do to make it work? And then like a retail business, AI, amazing. Bring in that efficiency and effectiveness, cuts off your whole admin, cuts off all of that you would need. Boom. You identified your costs already. You decided that that's not going to work. Let's speak to a professional. Can technology help? Can external resources help? All of those factors will then determine whether you still want to go ahead, revise, or drop the plan. Now, obviously, we all have ideas. That's why I started with the first question. I want to know about yourself and what's your business. So everyone here is already on that first stage. We all have an idea, either running or going to run, or successfully running already. Now, your fixed costs. Fixed costs basically are things that cannot change, right? They don't have a direct relationship between that income that you're going to make, right? So for example, if you're running a cafe, and if you're going to sell a cup of coffee, your milk, your coffee beans, your sugar will all vary based on how much you sell or how many cups of coffee are produced. However, Your rent, that's never going to change. And with the Darwin market, we all know where the rents are sitting at the moment. Your salaries, now here, this could be a variable cost, and this could be a fixed cost as well. And why I say this, and why I've put these salaries into fixed costs, is because as business owners, the number one mistake we do is we don't pay ourselves. Now, I'll ask a few questions. Rick starts, the Muay Thai boxing. With that, have you paid, when you started the business, did you pay yourself a wage?
Always.
Always. Great, right? Yes, so that's the number one thing for people who want to go into it. When you do your costings, put a small amount. It doesn't matter. You don't have to pay yourself 70, 80 grand a year, We're not working NTG. We're working in our own business where we have to sustain the business at the same time, but also our personal life. A lot of business owners that I've seen around are going to do everything to their business, reinvest the money, but then personally, they're not getting anything. And at the end of the day, business should be fun. You should enjoy what you do. Every morning when you wake up and you're going to the dance studio, you're loving it. You know what I mean? Like, I go to my accounting firm, I love it. As much as people think that I don't, or accountants are boring, I actually really love my job. And I wake up every morning and I'm looking forward to it. Why? Because I'm also getting paid. Because the day I stopped getting paid, I would then lose a little bit of interest from my business, and then that is not sustainable enough. Because at the end of the day, we all need to survive, right? And for survival, cash is king. Now, your insurances. So obviously, I'm sure that Grant's going to talk about some legalities, some licenses, and some regulations. But insurances are something that are requirements. So anyone who is already into the business is probably aware that public liability, professional indemnity, workers' comp are quite standard insurances. What people who are trying to start their business, a public liability is something that you can start off with straight away. A professional indemnity if you're into the legal, if you're teaching or if you're doing anything that involves you providing services. Or your workers' comp only if you have staff, right? You don't need workers' compensation if you don't have staff. Now, we'll talk about a little small case study. Now, opening a small cafe in Sydney, I'd use this as an example. So I probably should have said this in the start. We run SAMF Consultants. We're an accounting firm. We're based in Darwin, but we've got an office in Sydney, Melbourne, and Perth. So that's why I've got a lot of examples from other places as well. So let's say opening a small cafe, and this would be the same thing anywhere. Fixed costs of $2,500 a month, which includes rent and $4,000 salaries. So just by looking at this, we know that $6,500 we need every month to be able to sustain ourselves for the year in terms of our fixed costs. Now, let's talk about our variable costs. Variable costs are change, right? Like they sometimes occur, sometimes they don't, right? For some people, the variable costs are very minimal. For some people, variable costs are a lot. Now, let's talk about raw materials. How some of us are into the service industry. So for me, I'm an accountant. The person who's going to be teaching, dancing, any sort of activity may per se not include a lot of inventory or may not include a lot of raw material. But if you turn the story and if you start talking about solar panels, if you start talking about your skincare line, or if you're talking about your hair care or your cafe, you've got to fill up all that raw material first because you won't be able to sell. Now, again, when I do my cash flow, presentations, I talk about four things. I talk about accounts receivable, accounts payable, but I also talk about inventory. Because sometimes we go and invest all our money into inventory, and the next thing you know, we don't have a sale for it, right? And now we're sitting, and I've seen this so much when I go into workshops and I see all these items sitting there, and I'm like, wow, that is all money sitting there. So there are also tips and tricks of how we can manage our inventory, and we can talk about that in our other presentations. But yes, raw materials. Electricity, again, electricity is not a fixed cost because it depends on how much you're going to use. If you utilize the place because there's customers coming in, or if there's people dancing, or if people are doing their physical activities, then automatically, yes, you know that there is a direct relationship with the place being used and the electricity that you're paying. For some people, there might not be variable costs. So in your case, for example, when you start the circus entertainment business, that per se may not have, because you won't need an office as such in the start. You probably won't have electricity bills. There might be some things like phone, like your mobile phone, your fuel. Things like those can be variable costs because they move as and when you increase your business revenue. An example of your variable costs, I've taken an example of a cafe, and that would be relevant to anyone who's running an inventory business. You identify that your variable cost is $1.20 per coffee if you want to sell your 1 cup of coffee. The cost for that would be $1.20, which includes your beans and your milk. And then you talk about your startup costs. Now, for some people who have already started the businesses, fixed costs and variable costs are something that you have to constantly keep an eye on. Look at your numbers, your profit and losses. What is it that I did last year? Is my percentages increasing? All of those little analyses that people who are already running businesses should. For those who have not, your startup costs. And this is, I'm sure Grant is going to, tell me I'm from Africa. I didn't know this was a touchscreen. Okay, so your startup costs. I've got a little bit of a crude humor, right? So let's just go with that. So your startup costs, so obviously licensing, Grant's going to talk about that. But these are things that you won't need every time, right? Like if I buy a coffee machine, I'm probably going to use that for a long time until I have to buy another one, right? So these are only one-time costs that you put in, and then you don't account for them, again, when you're doing your yearly analysis. So your startup costs, $25,000 for fit out, $8,000 for the espresso machine, and $1,500 licensing. Separate one-time costs from ongoing operational costs helps to calculate break-even analysis that we're going to talk about in the next slide. Just with that, this is our first step. So it doesn't really matter whatever business that you do. This is the formula for it. Your fixed, your variable, and your startup costs, right? It could be beans, it could be milk, it could be solar panels, it could be products, it could be anything. But that's the formula. Now, we've talked about our costings. We've identified them. And with your expenses, always be a little bit, I would say, generous with your expenses, right? A lot of people, when they do their cash flow analysis or when they do their projections, we tighten our expenses like to the core, and we're like, no, we're not going to spend this much money. No, that's why I say don't even talk about revenue right now. You got an idea, put in all the costs. Even if you want to pay yourself 80 grand wage, put it in there. And then we'll speak to the professional, and then we'll see how we'll work it out, right? But this is your first step, even before you get into your revenue. Now, you've done your costings. Now you're projecting your revenue. You've already spoken about the first part in terms of what is your market research, what your industry benchmarks is, what is your competitor analysis, and what do your customers think about your product. All of that you've spoken about. I'm coming to the next part, which is a Darwin average cafe sells 100 coffees a day at $5 each, which is $500 a day, and that is $15,000 a month. Your location has better foot traffic, so you project 120 a day. Now, again, doesn't matter what business you do, right? If you're a dance studio, if you're a physical activity, you know how much you're charging, you know how many people are going to show up in that day. You know what your monthly projection is. And then in here is where you have to be not generous. Be as tight as realistic, right? So if you're doing any business, don't exaggerate your income. Very realistic. This is how much I think I can do in the first month. Give yourself those small targets and then gradually increase them. Now, look at this. That chart there, I could have done projecting revenues like this, right? But there is a reason why I've done projecting revenues upwards. Because in the first month, we go completely easy. Second month, completely easy. But then, while you're moving through your months or through your quarters, this is where you start speaking to professionals and start including efficiencies, effectiveness. How can this business start making money? How can we do all of this and get more customers? How is it that we can reach out to a wider audience? How is it that we can expand? And I'll give you my example. We run an accounting firm in Darwin. So with 150,000 people or 200,000 people in the whole of the Northern Territory, you know how many accounting firms there are, right? Like every other corner, there is an accounting firm. Yes, we do have a unique selling product that we provide services in 15 different languages. However, that we still do the same work, right? Numbers are the same. Everyone does taxes. Everyone does that. I reached a market cap. There was only a certain revenue that I could make in Darwin. I would never be able to break that ceiling because of how much competition there is, where we sit in the market with our experience and all of that. What did we do? Move to Sydney, expand. Now we're a small Darwin business in a whole big Sydney, right? So just even getting that small piece of the pie, we're doing the same revenue that we did in Darwin in Sydney. And then we replicated the model and did it in Melbourne. Why? Not because we weren't having enough customers. There's only so much that you can do in Darwin. There's that price ceiling, right? However, with the growing age of technology, your subcontract workers, your overseas, all of these extra things, it definitely plays a big, big, big role in your whole business, right? So even if your numbers are not looking good, don't be disappointed. Come speak to me, and I'll give you a little bit of motivation and courage. I don't know if we're going to make money, but we'll at least feel good about the business. Oh. Now, you got your idea, like we all do. We've all listed down our costings. We've decided what our revenues are going to be, what our first month revenue is going to be, and how it's going to increase every quarter, and what are we going to do to ensure that that increases your efficiencies and your effectiveness in that whole process as you grow. There comes a time where you need to know what is your break-even point. Your break-even point is when your total sales equals to total revenue. So that means that if your startup costs, if your operating costs, if your variable cost was all $15,000 a month, that means that I need to make $15,000 a month in sales to be able to break even. That is where your point meets. Your expenses and then your revenue. Oh. Sorry, guys. Oh. Sorry.
Tech support.
Clearly,
I'm not sure I know how to solve this. I think we need to. Can we?
Here guys.
We need the Harry Potter thing. No.
Yeah, tell you what, watch it.
Oh yeah,
Jump
plus or
on.
minus down the bottom, it comes up.
Oh, you got it? Someone's here?
On the corner.
In the left, when you were shrinking it.
There's a
Bottom
left.
Okay, good.
Okay, that'll do.
This is making me sweat now. Break-even point is your the sales amount where total revenue equals to your total cost. That means no profit, no loss. How do we get there? Your fixed cost is $5,000 a month. Now this is an example. Your selling price is $6. Now this is a coffee shop, right? Your variable cost is $2, which means your break-even is going to be 5,000. Let's see, selling price is 6, your variable price is 2. That means you got $4 of revenue there. You divide that by the $5,000 cost, it will give you a number that you need to make minimum to be able to sell. So that means, let's say, I wanted to generate 5,000. I had a cost of $5,000 a month. So I put 5,000 there. That's going to come out anyway. With my costings in terms of my coffee, I already know that it takes me $2 to produce 1 cup of coffee that I'm going to sell for $6, right? So you take that away. Once you do the 6 minus 2, you get your $4 there. You've got $5,000 as your fixed costs. Your fixed costs divide by that $4 will give you the number of units at a month that you need to produce or need to sell to be able to break even. So now, when we are hiring, this is where it gets interesting, right? Now, I'm giving you numbers. Great. Now, what do we do with it? This is where you go to your team members or to yourself if you're a sole practitioner or if you're a sole business owner or if you have a team. This is where you set KPIs. This is where you set your key performance indicators for your team members for every time you hire someone. You know that for you to be able to survive and to run the coffee shop, they need to produce 1,250 cups of coffee. Now, we'll talk about this another, but once you do this analysis and you're like, okay, 1,250 coffees a month, which is almost 410 or 412 coffees a week, 100 coffees or 80 coffees a day. Pretty realistic number, you know? It's not too bad. So in that way, you're breaking it down and you're like, okay, I can do this. However, I'm not making profits. So that means that anything I do more than that is going to be profitable. What can I do? Oh, I can go and spend a lot on marketing. But again, marketing is costs. As soon as you put a cost in, is it making enough money for me to be able to generate profit? Or if I throw in $2,000 in marketing, I'm only going to get $2,000 in revenue, and that breaks even. So every decision from this step onwards you make, your marketing, getting IT, getting an accountant or getting an external bookkeeper, all of those little things become a factor whenever you're deciding what do you want to do for your revenue. Now, let's say we got Duke's Cafe here. We'll talk about some of our sensitivity analysis. Testing how changes in pricing, costs, or sales volume affects profits. Now, we have identified that $5,000 was our fixed cost. Anything more than $5,000 is going to put us in that risk zone. Anything less than $5,000, we're pretty safe, right? As long as we're selling 1,250 coffees a month, we're okay. You know, we're able to pay our staff, we're able to pay ourselves. As soon as we sell less, we're a problem. Now, how much less is the question, right? We've got 50 people coming to our dance studio, right? If 2 people drop out, would that make a big difference? Maybe not. But with 10 people drop out, 100% is going to make a difference. In coffees, 1,250 cups of coffee, great. But is 1,000 the magic number? Or is 800 the magic number? Or is 1,200 the magic number? Because that is where it gets tricky. Because if your risk zone is very, very close to your break even, then you're having a problem. And if that trend goes on from month by month by month, that is where you need to start having a look at your books, start speaking to your accountant, start doing something straight away. Because what I've seen a lot of businesses see is cash flow is crazy, right? And because everything is PayPass, everything is FPOS, you're getting in the money straight away, bam, bam, bam. But you're not making money. You could be making $1 million in revenue, but with not having a bottom line. Imagine making $1 million in revenue sounds great, right? Really good. But if you're making $10,000 profit with that $1 million revenue, is that business worth it? No. Especially with that $1 million of revenue, you at least have a team member, like a few team members, of course. How much work is that going to be? How much fixed costs? All of those things play account. So your bottom line is something that we need to look into, and that is why we talk about cash flow so much. Because you could make $50,000 in revenue, but if you're cashing in 20 grand at the end of the year, you're winning. Your business is actually doing really, really well. When you're netting in 30, 40% in net profit, amazing. But how do we replicate that while increasing revenue? And that is where the test sensitivity analysis come in. So imagine you run a cafe, current coffee price is $5, your cost is $3, you know your profit per cup is $2. Now, super increased by 0.5%, and our staff wages have increased by 3.5%. So 4% as business owners, we have to cop this financial year, regardless. And that is why it's important, because if the cost rises to $3.50, our profit drops. And when our profit drops, you can decide whether to raise the price or absorb the cost. And this is, with a lot of things, it's fine, but I see people making this mistake with GST. Because we all know that when we reach the $75,000 mark, we need to be registered to GST. Now, for people who are starting their businesses, you're selling something or you're providing a service at maybe $100, $100, $200 an hour. Once you start reaching that 75,000 mark, out of the $200 an hour that you're charging, $18 goes to the tax office now. Then what? What has changed? Just your revenue. You're still providing the same service, you're still doing the exact same thing, but you just get an extra tax that you got to cop up with. Now, let's say $200 is what you are charging, and our cost to be able to produce that $200, our fixed costs and everything was $180. So how much was the profit? 20 bucks. Let's say you do well, you reach the 75,000 mark, and now you have to pay GST. What happens to the $20? Khalas, gone. Who has it? The tax office. What do you do now in that case? I'll probably ask the question here now on the floor. In that situation, what would you do?
Some creative accounting.
Okay.
I would say increase the price. $24.
How many of us as business owners, current business owners, or even people who are starting off, and by the show of hands, always don't want to increase pricing because it's not going to be fair for the customer? Great. And I think today what we're going to take out of this lesson is to change that mindset, because that mindset will not make your business sustainable. Someone's got to cop it up, and it's got to be either you or the client, right? Remember, you have a team, you have a family, you're supporting the wages of so many people. So in one way or the other, it's just about changing that perspective and be like, no, I have to charge this 10% to the client because I'm able to sustain my business, all the people that are around me, all the families that I'm supporting. And when we have that feeling, this is what's very interesting, because I actually saw this on in a cafe down south, when they charge 15% public holiday surcharge, right? I think it was 15 or 20%, like a crazy amount of money. But outside on their board, it said that, like, there was a staff who was working there, a team member, and they had a paper, a notice outside, and it says that the extra, it didn't say 15% public holiday surcharge. It's like 50% extra charge today to support the person in front of the counter and his family, like something along those lines. As soon as the customer comes in there, boom. You know, you have completely played up with his mind. He's happily going to pay the 15% extra, because now he realizes what your bigger purpose is. And I brought this now because I'll take you back a little bit, and when we talk about our idea, yes, our ideas are great, but with an idea, there's a purpose. We all here want to start a business because we have a purpose, right? That could be material, that could be immaterial, it doesn't really matter. But we all have that purpose, right? And that purpose in business is eventually linked to empowerment, to be able to sustain jobs, to give people a livelihood. So that is the bigger purpose at the end of the day. So whenever these changes come, it is what it is. People get worried. Oh shit, supers has increased so much, wages have increased so much, how am I going to live? It's okay, it's increased for everyone else, right? You either face it and move on, or you get into that rabbit hole and then your business is not doing well. And then 3 months down the line, boom, the cafe is closed, everyone with that is gone, right? Okay, now, price setting. We've got an idea, we've already got our costs, we got our fixed costs, we got our operational costs, we know how much it's going to be. But how much do we set the price? How much do we sell a product for, right? What is that margin that you want to keep? What is that realistic margin that you want to keep, right? You don't want to make something for $5 and then sell it for 15, right? That's also a little bit, unreal, and it doesn't make sense. But just an example, and a few factors to consider. One is, do you want to, and I call this a triangle of death, right? It's price, service, and quality. You guys can write this down if you have to. It's called the triangle of death because no business can have all three. You can't be set at the right price, give the best service, and also have the best quality products. No way.
Why not?
Because you can't give the best quality products at the cheapest price, right? Unless it just doesn't add up, right? You can't give the best service. I can't give you CFO service and charge you as a junior accountant. So if you want the CFO service, I will play with my service and I'll play with my price. Or I negotiate on my quality and I give you the right price and not the right service, right? How many have heard of Temu? Yeah? What's the price there? Great. Quality? Service? Not too bad. Service is actually better than the quality. They will respond to you, they will refund the product for you, or they'll do all of that. So that's their triangle of death. But now, let's talk about the bigger brands, right? Like your LVs and your Gucci's and your Pradas and all of that. In the triangle of death, where do they fall? Service and quality. Well, I don't know about the quality, but service and quality is what they think their business relies on, right? So as a business owner, remember this, there is the triangle of death where you need to play between your price, service, and quality. If you think you're providing the best service and the best quality products, charge what you need to charge. No worries. And that's your cost base. Sorry?
You basically have to drop one.
Yes.
So you have to choose what.
That's right. That's why it's called the triangle of death. Because it's just so hard to give someone the best service, your best 100% quality products at the right price.
But if you're keeping your, for instance, I work from home in a service field, but I'm keeping my costs down, so then I don't have to raise the price.
But then, the second part in our line of work comes into value-based pricing. Yes, we're not charging more, but is that customer paying for what I'm worth? See? You've done amazing, you've done all these years of business and stuff. You don't want someone to pay peanuts for your time, right? And that's where you value yourself.
I find the hardest thing with that, when you say, what am I worth? That thing I hate is negotiation.
Yeah.
I absolutely hate it with fashion. I'm actually delaying getting back to a customer because they've come back with a different price. And I actually felt a bit insulted. And I'm like, oh, there's not many people that can do my skill set. I'm the only deaf person that can speak and sign here in Northern Territory. And so it's very rare. So I know my worth, but yeah, it's really...
I'll tell you something.
Negotiating.
You just showed me your worth.
Yeah.
Right?
Yeah.
That's it. You're the only person here who can provide that service, no negotiation. So your triangle of death is service and quality. There's no way, and that's what I do with my clients, especially in the service-based industry. I've got my A clients, my B clients, my C clients, and my D clients. My D clients are always the ones who are going to cry for the price, right? My A clients are going to be my best ones. So that person who came back to you is your D client. I think that's actually good for you to know that this is the person that I don't have to deal with. Because if that person comes back to you in the first instance, you will never be able to increase your pricing with that person. Because every time you do that, where it's actually legitimate, they'll come back and be like, no. You see? So you've just shown me your worth. And the third is competitor pricing, right? If a coffee cup is $5 or $6 in the market, you can't just go charge $10 for it, right? It just doesn't Like even within the triangle of death, you know, like how much extra service and quality can you provide for a $10 coffee, right? Like you have to come with the price and the service there, or price or quality. That's where you play around with. And don't forget GST and your competitor pricing. Sorry, was that something? Don't forget GST and competitor pricing. So always add the GST extra. Now, how many of us take card payments, like in their line of work? Card payments? Card payments? Okay. Do you put a surcharge? There's a surcharge on the card. Do you put it on you or do you put it on the client? On them. Okay, great. You put it on you or on the client? Please. Great. Right? So most of us here are already on the right page. I've spoken to so many people that didn't even know that there was surcharge, and every $50 that they charged, they were only getting 45. So they're already losing money there. Now, an example. And Neil, let me know if I'm over with time or yeah. Price setting for a cupcake shop. Cost to make one cupcake, $2.50, right? We know we want to make at least 60% from that. And the competitor's average selling price is $4.50. Now, $1 plus the 60%, we know that we can sell it for $4. We know that we can sell that cupcake for $4. And the competitor pricing is $4.50. Since competitors sell it at $4.50, the shop decides to set its price at $4.20. $4.20, the irony. Balancing cost, profit and competition while still being attractive to customers. See, as soon as we say, oh, $4.50 is too expensive, no. But at the end of the day, you're still within that price mark, right? So that means that this person at $4.50 can also charge at $4.20, because we know that can happen. And for someone who's charging $4.20, has that 30 cents automatic margin that is set for himself. So you can start off your business at $4.20 for the first quarter, and then $4.50 straight away, where you have your 30 cents margin, and your markup and your revenue is almost going up. Do 30 cents by the 1,250 coffees we are talking about is an extra $300, $400 in revenue.
You can do that as like your opening price.
Absolutely. You know, boom. You know, that's why you see when it comes to tax returns, from $149, from $99, you know, like that's probably one thing that has never changed price since the time I've come to Darwin. Like for the last 10 years, it's cost the same to do your tax returns. Like from $99 or $149. Okay. Now, let's say we only sold coffee, and this is where I talk about fanning out your income. Fanning out your income means when you have one product where and this is the effectiveness and efficiencies that I talk about, that if you have one product that is only making certain revenue and you know that you can't maximize it or you've just reached a ceiling, what do you do to the business? That's what I'm saying. It's not that the business will close down. There's so many other things that we can add and subtract. And I'll give you this example. Everyone's heard of Macca's, right? Macca's created a $1 billion economy just by asking one question.
Would you like fries with that?
That's it. Would you like fries with that? That upselling completely changes. And that is why people in the service industry where you're more client dealing, upselling and having those extra products is great. So for example, if you're at a dance studio, you know, I don't know how the dance studio works, but I'm just gonna try my best and give an example. But if someone, if we come into the dance studio and if we know we're spending this much per session, have you got water bottles there? Right? Because everyone will need a water bottle after. Do you have Powerade there? You know, do you have dance clothes? Because as soon as you get into that rhythm, right, you're like, oh, I think I can wear some really good tights here. Boom, upsell. And that's your added revenue. Now, coming back to the coffee shop, coffee only, average spend $6, break even, 2,000 customers. By month 3, you're already at a loss. And this is just a rough analysis, right? Like $6, you have almost 2,000 customers, $12,000 in revenue. But after 3 months, you'll realize that even your rent and your costings and everything is $15,000 a month. There is no way that if you're selling even 2,000 customers, you will ever make money. Remember, your fixed costs are the same, right? Your fixed costs don't change. And I'll give you an example. The coffee shop, the 1995, in the city on Kavanagh Street. When they opened, they only sold coffee. That's it, right? We went into the books and we're like, nah. This, because your rent is the same, everything is the same, you have the same team members, there's no way you can be doing only coffees. You can see the difference in the books. Add sandwiches, just as an example. Coffee and sandwich, average spend from $6 becomes $12. And this is where your team members come into play. And I've learned this at a workshop that happened to me just last week. I went to get my car tinted. I went to get my car tinted. Oh, tinting price from $300. I'm like, great, this is not a bad price. Go in there, $300. Oh, Alia, you want me to check your tires as well? Yeah, all right. I came out of that place after spending $800. Yeah, wallah, I'm not even joking, you know? But it was so attractive. You don't have to sell everything straight away, because once the customer comes in, you have already got 50% of his business. All you need to do is now play with the triangle of death and focus on your service and quality to upscale or upsell your products. And it could be anything. So in your case, if you're doing workshops, if you're doing trips, if you're doing one-on-one sessions, you know, there's so many things that you can add in that one simple business model, and it's a whole different game, you know, because now you're making 4 different streams of revenue from just one business. Break even, 1,200 customers, directly changes the whole game. Any questions so far? Is it all good? Like, is it making sense? Like, yeah? Sarah wanted to open a bakery in Brisbane. Startup capital 80 grand, break even 8 months, company structure chosen, liability protection, which is the company liability. Strategy and outcome, careful planning, right business structure. Bakery reached break even by month 8, became profitable within 1 year. Now this is the other thing that we need to realize, that as soon as we open a business, we're not going to be profitable from day one. It'll be great if we're profitable from day one, you know, but if we're not, it's okay, because you need to have that cash flow projection. And for that, we have, I think that you said there's a downloadable version of a cash flow.
Absolutely, yeah, exactly. There's a cash flow spreadsheet prepared for everyone. All of the calculations are done. You only need to put in your costs and your income. It's all done for you. It's on the link you got on the course content page. Download it, put in your numbers, got that.
And for people who are also currently running the businesses, it's also good for you guys to actually test your cash flow, because sometimes we don't test our numbers. Are they actually working? Are they not working? You know, are we doing well? Are we not doing well? And all of these are questions. So again, first year, you have to keep that leeway, that, okay, I am going to lose some money, you know, it's part of my startup costs, but remember, you're already paying yourself. Don't get away from that. Pay yourself first, and then this situation comes in. So when you put in the cash flow numbers, put in your pay as well, the bare minimum that you would need to provide for rent, groceries, and electricity.
When you say you lose money, you don't lose money, you just don't make profit.
You don't make profit, that's it. So you don't lose.
Revenue, you pay yourself, but you don't make profit.
That's right, you don't make profit. What happens is that because of your startup costs, and you've already invested like 50 grand or 70 grand in actual equipment and stuff like this, in this particular scenarios, then that is where you're actually not getting back, you know, that money that you have invested. So you're not obviously losing money, and you're not making money as such.
You don't take in consideration the amount that you spend with it.
That's right. Like when you...
This is done, this is over. It's after the year 1 that you will become profitable, that you will cover the cost of the original equipment.
That's right. So that's why what we do is with the equipment and stuff, within what we would like to do as a business is try and recuperate that money within that first year. So let's say that our startup cost was 50 grand, and then all the other $100,000 was our expenses, right? We went and only generated revenue of 50,000, right? So, and if next year we do another 50,000, and then the third year we do the 50,000, so that equipment is never getting paid. See? So the idea would be that if you invested 100 grand straight away, you do 100 grand, or you find that middle ground where you do 80 grand, right? So then the next year, maybe you do 80 again, you know, not too bad, right? Because the expenses are not going to be the same. and you're then recovering all those costs that you've put in. Because that 100,000 was your money. Ideally, you would want to get that out of the business, right? The longer it takes for that money to come out of the business, that means the business is not doing well, right? So 3 years, 4 years, and you've already invested all this money, and all you're getting back is just a wage, and not that whole investment back. And you're like, you know, because now that equipment and everything that you have bought for 100,000 is probably not even worth 100,000 anymore.
So you could get the investment back within 1, 2, 3 years, whatever. So you could get it back to yourself, for yourself.
Absolutely. Because that is your investment into the business, right? So it was your personal money, you've already paid tax on it, everything, right? So it's either a loan or it's either capital that you've put into the business that you can draw out at any time you want. But you can only draw out if the business is making money, right? Otherwise, it won't be able to pay itself.
Ali, just really quickly, are you part of the business growth program that we?
I am, yeah. We are actually a service provider in the business growth program, yeah.
No, right, I'll contact you tomorrow. Does everyone, I don't know if everyone knows what that is. There's a $10,000 grant on BECNT, and you can dollar match. So for example, if you were needing Ali's expertise for X, Y, Z, and his fee was $8,500, this business grant will provide 50%.
Yep.
Will they buy me a new car?
There's that as well. There's lots of different grants. There's business grants for solar. There's business grants for motor vehicle. Honestly, check it out. And Northern Territory offers more than anyone does.
Business grant and fund.
It's quite incredible. And that's on BECNT.
Oh, great.
Yeah, just check all that, just register, it takes 2 seconds email or whatever, but thank you.
No, great, and the business growth program is actually for everyone, whether you're a startup or not a startup, an existing business as well. And it's not only sorry?
Turnover more than $75,000.
More than $75,000? Oh yeah, sorry. The business growth program actually has some requirements. $75,000, you need to be a territory business, you need to have employees as well, or no? One employee? One employee, right?
Turnover over 75K is the...
Okay, it's the bare minimum. Right, sweet. Yeah, so there we go. But also...
Later during the business.
Yeah.
They don't help you at the start.
Business Enterprise Center actually have this program that they run for new businesses where they provide, well, correct me if I'm wrong, I'm talking on behalf of BECNT here. So they provide, they will link you up to myself, accountants, IT people, marketing people for free consultation for a few number of hours, even if you're a new business. So I'm sure that,
I'm sure when Grant comes back up, he'll let you know the services that we offer in addition to that.
Yeah, so there's free consultations, for startup businesses. So I'm happy to have a chat with as many as required. Alrighty, now, this is all about numbers. Yeah, we're done with our costings, questions, comments, criticisms, recommendations.
Praise.
Thank you. Alrighty, now, you've done your costing, you've done your cash flow analysis, you've done this. Now, what structure should I start? Am I running as a sole trader? Am I running as a company? Should I do a partnership or should I do a trust? It's a funny thing because I have a few clients that come to me and they're like, oh, our accountant told us to do a trust, so we did a trust. I'm like, why? And they don't know, So whenever you're starting off, remember why you're going to do what you're going to do. So first, you're sole trader, single owner, right? Simple setup, no drama. ABN is free to get. Business name costs like 30, 40 bucks a year. Easy and cheap, but unlimited liability. So if you go fuck up, it comes all back to you, right? There is no caveats, there is no insurances. Insurances will help you still, but you have the direct liability. Now, also with the tax office, let's say you start off sole trader and you have all these huge debts. Directly you are liable in everything that you own. So you own a home with your partner, but your name's on it, boom, it comes under siege, right? Everything that you have as an individual starts coming into that, risky part. But if you're running a small, service business, you're a legal practitioner, you're just working from home, pretty safe, no dramas, sole traders are pretty good structures because of the recent tax changes that have come into play. Before, it was very, very cheap to just open a company because of less taxes. You pay 25% flat. However, with the new tax rates, as a sole trader, even if you're making up to $100,000, $150,000, it doesn't really matter, right? In terms of taxes, you're almost on the same 20, 25%, maximum 28%. It's only when your sole trader business starts making the $150,000, $170,000, $200,000, that's when you need to start looking into other structures. And it happens to a lot of tradies of ours, like they're running as sole traders, a chippy making $200,000, $300,000 a year, and then comes to us to do their taxes and gets a $45,000 tax because he's on the highest threshold, right? So this is where the company comes into play. Now, we talk about your sole trader. Your partnerships are basically two sole traders coming together. That's it. So it's mine as an individual, him as an individual, right? Let's go, let's do some business. It mostly happens in legal firms and practices. We have a partnership model with our interstate offices. And this is where there's 2+ owners. Your profits are shared. So if you make a big amount, it's then shared between two people. Your resources are shared in terms of, everything. And also your liabilities then shared, right? So any sort of debt, any sort of liability, it's not only you who's going to be accountable. It's going to be 2 people or more people, where there's some partnerships, there's 4 people, 5 people in a legal firm. So all of that comes into account. Your company. Now, any questions on sole trader and partnership? No. Your company. Your separate legal entity. That means it's completely separate than from me. So SAMF as the company is completely separate than me as a director or me as an employee of the company. Limited liability and easier to raise capital. So if you're looking for credit cards, start-off loans, some extra help, if you have a good business case, if you've got some technology and stuff that you're putting into your business and all of that stuff, it's easier to raise capital because now it's an entity, it's registered with ASIC, you have a PTY structure, you got directors, you got shareholders. It makes you look a little bit more legit when you're going out there, to do anything. Cons, more regulations, and obviously comes with a cost, right? So it's not as cheap as your sole trader. When you have a company, you need to then do your company tax returns, which you can't do by yourself. You have to go to an accountant. If you make more than $75,000, you need to do the GST. You need to do your PYG installments. All of that extra stuff comes into play. Again, you don't need to know everything, right? You have accountants to do this for you, right? So they'll probably have to guide you. And it's more regulated. Like I said, it's not only the ATO that's looking at you now, it's actually ASIC as well that comes into the picture, who regulates PTYs. Limiteds. Now, trust. How many people know about trust? Okay. Yeah? Sweet. So what happens in a trust? There's different types of trusts. First, I'll talk about pros and cons. Key features. This, like in a company, in a sole trader, you have sole trader. In partnerships, you have 2 sole traders. In a company, you've got directors, you've got shareholders. In a trust, you've got beneficiaries and you've got trustees. So the trustees look after the trust and the beneficiaries receive the income or they receive the profits or receive every outcome, every outgoing from the trust. What is different? Nothing really. It operates the same, registered to GST, registered with ASIC, registered with ATO. Everything that you would do in the company, it's only when it comes to the distribution of profits is when you have that discretion. Now, what's the difference between a company, because it runs the same, and a trust? Yes, sorry. No, tell me.
I know, I'm just guessing, but I know that, like you said, the trust has discretionary beneficiaries, or sometimes you can choose to pay out. You don't always have to, but probably with the company, people get shares in profits.
Yeah.
Share.
Perfect. Nailed it. So with your company, when you have shareholders, so Dukes Cafe, if you're the shareholder, that means if Dukes Cafe, let's say he's getting salary, right? Let's say you're on $100,000 wage. So you got $100,000, and now Dukes Cafe also makes $100,000 in profits. Now, remember the profits are whose profits? Company's profits, because it's a separate legal entity. It's not your profits. So that means if the only way And the only person that profits can be distributed to is the shareholder. And in this case, you are the only shareholder. So if in any way you take profits to your name, in addition to the $100,000 wage that you're already receiving, what's going to happen? You're going to be on the highest tax rate. And with companies, there is no option because you have to distribute it to that shareholder that is mentioned initially. Sorry?
If you don't want to take the profit and reinvest it.
Oh yeah, then you leave the money in the company. So you just pay the 25% tax. You got 100 grand profit. You pay 25%, 25,000, 75,000 remains in the company, and you keep it in the company, and it can be used again and again, and all good. But if you want to take it out, then that is where the tax.
When do you recommend changing from being a sole trader to a company? Like, what's the
150,000 net.
And so once you're there, you're happy, then you're like, right, let's do the company.
Yeah. That's what I have. That's the number that I have. It's just easier, If I'm making $150,000 net, I need to open a company now, because then as a sole trader, for 150, I would be paying probably 40, 45, whereas as a company, I'll be paying like 35, 37.
And hopefully in that first few months where you can see your profit, you can tell what you need.
That's it, because that's why that's why I put the structure thing at the end, because this is not what you start off with. You start off with your numbers. Let's see how your cash flows are looking like, and if it makes sense, then we set up the structure. People go opposite. They do the structure and they're like, shit, this is not the right structure for me. So with the trust, the only difference is the trust has trustees. So there's no shareholders. And the type of trust you can make is discretionary trust. It's called a family discretionary trust or a discretionary trust. Now, English is my 6th language, so just using the discretion word, it means that the trustee has the discretion to distribute it to whoever. So today, if you had a trust, right, and you made $100,000, right, and the cafe can be the trust, he could decide to distribute it to anyone and anybody. So you could have a sister who's just come, who doesn't have income. So I'll be like, I'll give you 20 grand. Because why? There's no tax. Because earning below the threshold. I've got another niece out there. Okay, I'll give you 20 grand. But those 20 grand need to be transferred. What used to happen back in the day, and we have probably heard this word, trust fund babies, right? Back in the day, when people used to have all this money that they generate in the trust, they just tell their accountant, yeah, I'm giving this one 20, this one 20, and then the accountant used to just put in the numbers. The money is still sitting with the trust. It never goes out. It's just for tax purposes. But now the ATO want to see that transfer of funds. So if you're going to do the distribution, great. Let's see a bank statement that shows that the distribution has occurred. And if it's not, then the person who's actually the trustee becomes liable. Because the trust does a tax return, but does not pay taxes. Because all that income the trust makes has to be distributed. Now you see, that's another drawback. Because if you're a company, you have the choice of putting the money in the company and reinvesting it. With a trust, no, right? Money has to go out. The trust has to do a tax return, and all the money that it shows at the bottom has to be distributed. Annually. Now, that's why people have corporate trustees. So you can have an individual trustee, and you can have a corporate trustee. Now, I'm getting a little bit complicated here, so if people get a little bit off track, let me know. So you have a trust, you have an individual trustee, you have an option of having a company trustee as well. So that means if a situation comes whereby annually you have to distribute the funds, and now you don't have sisters, you don't have nieces, and you don't have nobody to distribute it to, the hell, I can't distribute it to myself because I'm already on 100 grand wage. You distribute it to that corporate trustee. And then that corporate trustee pays the 25% or 30% of tax, and the money remains there at the end.
What's
Yes.
the minimum age of a trustee? Because, a 6-year-old can have a bank account.
Yes, so 6-year-old can have a bank account. You can distribute money to whoever for as long as whatever age they are, but there is caps. So someone who's young is only allowed to receive like $500 a year.
Oh.
Yeah. So as soon as after they reach 18, right, you can distribute bigger amounts, but then there's obviously caveats there because 12-year-olds, 13-year-olds also have tax file numbers. Right? I'm going to leave it at that.
Yeah. I don't trust my
But the 12-year-old and the 13-year-old bank accounts are normally managed by the parents.
Yes.
I'll leave it at that.
Well aware of what you're saying, yeah.
Ali, just a micro question. The trustee and the beneficiary,
Yep.
Can they be the same person?
Absolutely.
Okay.
Yeah, so you can be the trustee and you can also be the beneficiary
Right.
and say that you receive the funds.
Yep.
Yeah. Yeah.
So you have to know how much your company will make in order to decide what structure.
Absolutely.
So you can't just decide, okay, I think trust is the best, and you just go for it.
Yeah, but in what numbers? Because with the trust, yeah, great, but then the trust is, you have to do a tax return for the trust, and you can't do it yourself, you have to go to an accountant. You have to do a tax return for that individual trustee and all the beneficiaries, right, whoever's there, because you're going to show distribution. So there's so much cost associated with it. Just forming a trust is like $3,000, you see, whereas forming a company is $1,500, and forming a sole trader is free. You see, so all of those things then come into, that's why the numbers are very important. So I started my speech, if you love your numbers, the numbers are going to love you back, because that is the main thing, for any business owners.
Is it hard to change from sole trader to company or trust?
No. It's from sole trader to company is easy. As long as you're running in a business and you're the 50% of the company is owned by you, then that's fine. It's very easy. You just register a company, put the ABN details because you already had an existing one, and the ATO already knows. So no dramas there. For a trust, it's a whole new process then, right? Because then you have trust, it's a whole different structure and all of that. So then it's not very easy, but it's also not very hard because you have an accountant to do it for you. So you don't have to do it on your own.
Before I came in today, I was like, oh, sole trader, I want a company. But now after hearing this, I'm like, company or trust? I don't know which now.
Well, I think I've done my job then. So no, that's good, because that's the type of questions that you need to ask, and then you go back to the numbers. And ideally, a company is always a good start off, right? Because you can make a lot of expenditure. You can always add shareholders there, right? You can always add directors if you want. And the company eventually just operates itself. And that's what a lot of people do. They just get a wage, 50, 100 grand, whatever, let the money stay in the company, pay the 25 tax, and let's just rotate it. It's pretty straightforward, pretty good. With trusts and stuff, when I look into real estate and all of those things, then a trust is good, because when you start buying real estate, especially investment properties, you're making rental income. You see? And then that rental income, imagine if you have a wage and you have all of that, plus the rental income, even if it's $10,000 or $20,000 extra rental income, but it comes to you, you're paying the highest threshold. So that's why then the trust helps, because then you can distribute that rental income if it's low, or keep it with the corporate trustee and let that corporate trustee pay the 25%, and you leave the money there.
So with a corporate trustee, are you protected with that? Like, how does that person get?
Now, in terms of assets protection, you're protected. All your assets, if they're bought under the trust, they're fully protected, right? That's the difference. So if someone comes and sues the company, but all the assets are under the trust, so I'll give you my structure, right? SAMF consultants, I'm the director. On top of me, the shareholder is not me. The shareholder is the Dhirani family trust. That's the one that owns. So any profit that the company makes goes to the trust, and then the trust decides who they want to distribute the money. So I'm an individual trustee, but I also have the corporate trustee. So all that money that goes from SAMF to the Dhirani family trust is then distributed, not to me because I get a wage, distributed to that corporate trustee, and that's where the corporate trustee is getting the money, all the distributions. And I go buy property from that trust or from that corporate trustee, because the bank needs to see two things. One, deposit, which you will have obviously because you want to buy something, and number two, income. And this corporate trustee is making income from SAMF consultants eventually through a whole channel, but it's still receiving money every year. So because of that, I'm able to buy property and everything that is real estate wise is then protected there. So if someone comes and sues SAMF for my negligence, or just because I told you 12-year-olds can have a TFN, nothing happens to my property, right? Everything happens to my business. I go bust with the ATO. I got a GST liability. I want to do a small business restructure. All of that happens to the company. that thing is completely safe.
The corporate trust is more like a bank.
It's called a shelf. It's like a shelf, you know? Like it's called a shelf company and it's completely legal, you know? Now, if you have that corporate trustee offshore, then it can raise a lot of questions. But if it's a legitimate business, then you can do. Like Dubai is always a red flag, but Singapore is great. You know, so yeah, you have all these extra loopholes that you can play with. But as you grow in your business, you will eventually see that. But
we all have this problem on that.
Yeah. I'm sure, you know, that you started off right, so I'm sure we'll all have that problem. The only thing that we need to consider is that if there is a moment of fraud, right, and if you have done something that is negligence or something that has affected someone's property or resources or a person, then you're not protected at all. Then everything that you own comes out there. You see? So.
You mean like underbelly? Okay.
Sorry?
So you can have a company and a trust. And so if I were to buy a warehouse to do my activity, then I better have a trust.
Yeah. Because the trust owns it, you know, rather than the company owning it.
So you create a company and you create.
Yeah. So then the trust owns it, and then you can get rent because the trust owns the commercial warehouse and the business is going to be using it. So the business pays rent to the trust. So then the trust has income. Yes?
Of the chat about trusts, we can get everyone some individual time with Ali to talk about
yes.
trusts.
There we go. All right. Again, asset protection, tax flexibility, complex setup and compliance. Example, sole trader, real life twist. Maria keeps all profit but also takes on personal risks. Partnership, two friends share profits and work but are jointly liable for mistakes. Tech startup in Melbourne, separate legal entity, personal assets are protected from business debts. And then obviously family rental properties, income distributed to family in a tax effective way. With that, quick quiz, test your knowledge. What does break even mean?
Bills are paid.
In a company structure, who is responsible for the debts? Great. And which factor you should consider when setting prices? Great, winning. Takeaways, financial feasibility is your reality check before you get into anything. Know your costs, forecast your sales, test your scenarios, choose the right structure, and then your real life adjustments, speak to a professional and see how we can tweak and, you know, put the offshore companies and all the rest that we have to. With that, thank you very much, team. I really appreciate it. You know. That's our website. That's our email address. You can find me on LinkedIn, Ali Dhirani, Facebook, Instagram. We put a lot of content out there. So, yeah, we'll look forward to seeing you guys all. Thank you. Thanks, mate.
Thank you, Ali. I'm sure you're going to have a few people checking out your social media sites there after tonight. That was fantastic. Sure, you all there was so much information packed into there, wasn't there? So many chunks of valuable information. I'm sure everyone got a lot out of that. I hope you're all taking notes. Yeah. If you weren't taking notes, don't panic. You'll be able to watch the video again later. Go over it again, and in your workbook also you're going to get a lot of information out of. Okay, so that brings us to the non-sexy part of business, as I said before, licences and regulations. Licensing and regulations, it's not, as I said, it's non-sexy, but hey, it's important. It's really important to be compliant before you open your doors, start trading, and we'll go over why shortly. But being compliant means that it's going to help protect you, it's going to help protect your business, and if you've got staff, it's going to protect your staff. So it's really, really important to be compliant. And depending on what type of business you're running, what industry you're in, even the location you're in, regulations change. Different licenses, different permits and so forth are out there. And if you're going to go out there and just try and work out yourself, hey, what do I need? What licence do I need? What permit do I need? It's going to do your head in. There's a lot out there, things you wouldn't have even thought of. And you can think, if only there was a website where you could just put in your location, put in your type of business, answer a few questions, and bang, there's your report telling you what you need. Well, luckily there is, folks. Luckily there is. And it's called the Australian Business Licence and Information Service, or ABLIS. Sorry?
That's very sexy.
That is? Okay. Oh. Each to their own, I guess. The Australian Business Licence and Information Service. The link is in the workbook, or you can go and Google ABLIS and it'll come up. This site's going to give you information that you need for your type of business on licences you may need, regulations, council approvals, depending on what location you're in. There are so many different council requirements and so forth, so all that information will be there. And this is essentially what the homepage will look like when you jump onto the website. What you need to do, and I'm not going to touch the screen, however, you'll click on Find Licences for your business, and it's going to start asking you a series of questions. There's 4 or 5 really simple, easy steps. Take you about 5-10 minutes to actually go through this and get a good report of everything you need. First question, what type of business are you going to be running? Can get clunky in some types of business trying to get it right, but for tonight we're going to be a cafe. So, okay, relevant tonight with Prabin here in Duke's Cafe, but we're going to put in for a cafe. Simply put in the type of business you are. You can put in 3 different types if you've got a bit of a range there. After you do that, the next question, step 2, it's going to say where are you located. You can put in your postcode, you can put in your town, wherever you are. It's actually even, I've used it for quite a number of remote communities, and it even has those on there. And as I said, council requirements change in different places and so forth. So put in the location, that's important for you. The next question it's going to ask you after that, we've just had a brief discussion on business structures then. What structure are you going to be in? Now, sole trader, partnership, company, whatever you're going to be doing, trust maybe. Some of you still probably are unsure. You can tick on that. Tick that you're unsure, that's fine, and go forward. If you tick that, it's going to probably give you a lot more information actually on the structures once again. So once you've done that process, it'll then ask you a series of questions. I don't know how many, I haven't counted them, probably about 20 questions. But as you can see down here, the yes, no answers. So it takes you no time at all to hit yes and no. Don't go and tick yes for everything, because some of the things won't be relevant for your business. And if you tick yes for everything, you are going to get a really, really big report, and that's going to do your head in. So tick yes for what's relevant for what you're doing. Or maybe there's only there'll be things on there you might be doing, but you already need that, you already have that information. So tick yes for what you're after. Once you've gone through that, and we get to the next step, you're going to get your results. Search your results. They're going to be there. This person's got 30 results, 30 different things there. They've ticked yes for everything. See what I mean? It's a big report. And then you can start to go through that and see what you need. On here, you'll see dining music licence. I want to use that as an example actually as to why it's important to be compliant. Typically that doesn't come up at the top of the screen. I've put it on here for tonight's purpose. You've all been into a cafe. You've got music in your cafe?
Not the live one.
No?
Spotify.
You got Spotify?
Yeah.
Got a licence?
No.
Right. You'll want to listen to this. If you go music in a cafe, retail space, go to the car yard and there's music going. It all depends on the customer type that you have as to what you might have playing to get that right music for your customer base. So in Sydney, probably about 3 years ago now, and it's probably happened again since, but the case I heard in Sydney about 3 years ago, cafe there, had their music on, as you do. Person's gone in, they've bought themselves their cake, their coffee, whatever they were buying, sat down and there was music playing. And it happened to be their music. This was a muso that had come in. If I was a muso and someone was playing my music, I'd be pretty excited about that, especially if you've heard me sing or try and play any kind of instrument. And they probably were excited, but they looked into this and it actually went through the courts. That company got fined $200,000. You pay Spotify though, so I think you're covered there. Yeah, back me up.
Brisbane.
I think you're paying for Spotify, so you might be right there. But if it's on hold music, You know, you put radio on your phone on a hold and so forth. All of those things you need a licence for. Something that most people don't even think of. You hadn't even thought of that, had you?
No, I was aware, but that wasn't.
But you're on Spotify, so you're fine. Yeah, yeah. So it's something. There's things when you go through this process that you may not even be aware of that you require, and that's the importance of going through something like a Bliss, because it will highlight areas that you're not familiar with. There's probably a lot of retail outlets, cafes out there. They're not trying to do anything wrong. They just don't know about it. They're not aware of it. So just something to keep in mind. Well, folks, yep. So 30 results there. There's going to be a whole range of things. If you put in there that you're going to be hiring staff, it'll give you information on what you need for staff and so on and so on. So just something we wanted to touch on quickly tonight, so you're aware of that. Yeah. And the great thing about this, what I really like about it, say you've clicked on dining music licence, the old APRA licence, it doesn't just say that you need this licence. When you click on the link, it'll actually direct you into the site, that whether it's a department, whoever administers that, and gives you more information, tells you what you need, who you might need to speak to. I think in this case, for this one here, it actually has the forms on there that you fill out. It used to, I think it still does, but it'll have the forms on there. So it'll guide you right in there and get all that information. So it's peace of mind and quite a simple procedure to do, and you can get all that information and be compliant before you get trading. Okay, that's it. I did say it was a cameo role. That's it from me tonight. So next up, I'm been looking forward to this showcase of Prabin's on Duke's Cafe. I don't know if you've all been to Duke's Cafe. I've been there a fair bit late, just of recent times, and I must say it's consistently good coffee, and that's really important for me. Anybody that knows me knows that coffee's important. So it's all yours, mate.
I've been just taking over, really. Mine one is not that interesting. I'll be using a whiteboard and a marker. Old school, yeah. And then this one, I would say it's an honor to speak, but it's not true. Neil actually set me up for this one. I got a notice midday yesterday to speak tonight. But still, my name, Prabin. I run Duke's Cafe and a Brew Dreams Coffee Trading. With Brew Dreams Coffee Trading, have done over 1,700 students so far in over the period of 4 years. Out of them, 7 or 8 have started their own business, and one is very near Simply Food, which is in the arcade. They were also my student. On top of that, I supply coffee to 10, 11 cafes here in Darwin, and one including the government house. I supply coffee to them as well. So this one, I'll speak business in general, okay? Like if you're starting a business, if you're planning to start a business, you might get some good knowledge from me. Well, I've been in a business for only 5 years. It's not like I'm an expert, but there's things that I have done well for myself, for the people that that's working for me, and also for the community. So let's say so all of us have a business of some sort or planning to start a business, yeah? If I to ask you what your job is as a business person, what's your answer? What is your job? Let's say a main job as a business person. What do you think it is? Making money. We'll come to that one, yes.
Providing a service.
Sales. So.
Providing a service.
Yep. So the main thing here right now, as a business person, your main job is sales, which makes you. Can everyone see or no? Which makes you a salesperson. Now, when I say salesperson, what's the first thing that will come in your mind?
Negative.
Yeah. Negative, yeah? There's always negative.
Pushy.
Yeah. Pushy, car sales, yes. Anything else? There's also some positive ones, okay? Let's say positive ones. As a business person, this is what you want to be, always positive, not negative. Your job as a salesperson is to not to do any of those, but try to give a good experience for the customer. And that makes you a good salesperson. You're doing your job really well. Yeah, agree? Disagree?
Agree 100%.
Okay. Now with the salesperson, there's generally two types of salesperson. Let's say two types. Let's get fancy here. Two types of salesperson. One is introverts. Another one, extroverts. Now for someone who's going to start a business, you might be thinking, here. You might also be thinking, I still got an accent coming from Nepal as an international student. I'm still right here. Who do you think will do well in a sales, introvert or extrovert?
Either.
Both of them?
Depend the customer you have in mind.
Rather than a customer, let's speak about a general salesperson. Who do you think?
Extrovert.
Right. Yeah? Everyone agree with this one? The answer here right now is neither. You actually, there's a person called ambiverts. This is the culture guy. This is the car sale guy, the Vodafone guy who keeps talking, never stops, not even listening to you half the time, more than half the time, and keep on going, which will definitely not make you a good salesperson. Not speaking will also won't do anything good. You actually have to find a balance with these two, and then be a this one. That's when you start selling more. Good again? Yeah? So let's say I ask you, why do you want to start a business? So there was someone already said money, yeah? Profit?
Passion, help people.
Let's say community.
Freedom.
Freedom, yeah. Freedom, definitely, that's an important part too. Anything else?
Passion.
Passion, yeah.
Flexibility, travel.
Everything nice to do with the business, okay? But generally, travel, these are the things that is nice. So generally, you will start your business for three reasons. One is the profit. The second one is for your community. And then there's the people. When you're focusing so much things on the profit, that's when your business goes downhill. Your first priority here is to make a profit. As an accountant, you will say it's a good thing. Yeah, it is. You need to pay yourself, you need to pay your staff, whatever things it is. But starting a business, this should never be a priority. Let's agree to disagree. Say whatever you want. It's not your first priority. Then there's a community here. There was a time when I put so much effort on this one. I was running out of money twice in 3 years. Luckily, I met Neil right at the time, and that's when we started discussing about the not-for-profit coffee training. That's when now, over the period of that time, have raised plenty of money, so it's looking positive again. Your three things for the business. Why is for your people, which is your staff, which is yourself. Then there's a community. Now it's a sustainability and stuff, helping your community, getting involved with the community, and then is your profit. This is, let's say, a golden triangle. People, community, and then profit. Good? Yeah. Now, you know what your job is, you know what you have to do, you know why you're doing it. Let's say what your role is. What do you think is your role as a business person?
Relationship service? Customer service?
Okay. 100% right. Your role as a business person. Business person is 100% customer service. Now, if you haven't started a business, this is going to be a key. If you have started the business, you're not sure what to do. This is also a key. Do not have to follow, but think about these things when you start a business. Yeah, good. Okay, next one is, let me tell you a story, okay, about this guy that I know. Almost all the story starts with once upon a time. So this guy was an international student, was from Nepal as well, who came to study in Australia, in Brisbane. And then this guy had so much passion in building a business. All he said to everyone was he was going to open a business sometime in the future. Somehow, somewhere, he also said he was going to be a millionaire to almost everyone, to his friends, to his family, whatever. He actually believed he was going to be a millionaire, which he kept on saying all the time. Now, okay, this is during a COVID time. He came up with the idea of opening a cafe during a COVID time. Now think, okay, this was in a height of COVID when everything was shut. You know, there was a cafe, restaurant were open. Most of them were closed, but then few of them open, but partially open. And he wanted to start a cafe. That's when everyone said, no, it can't be done, it can't be done, because humanly, like, come on, everything is shut there. And then there's this guy who never owned a business, who have never done a business before, wants to start a cafe. There's absolutely no way he was going to do that one. Now, okay, how many of you think after this 5 years, whether he's still in a business, yes or a no? But before.
Did he deliver the coffees? Uber Eats?
Yeah. Uber Eats, everything. Now, 5 years back, okay, this was 5 years ago, he started a business. 5 years back now, do we think he's still in a business? Yeah?
He's a millionaire. He visualized it.
Okay, let me put that. Let me put that in the context, okay? Just on the ground floor. Rabbit Hole has changed the ownership for at least 3 times in the past 5 years. Same thing with the China Bar, 2 times. Jen's Kitchen, at least 3 or 4. And then just across the road, there's a bar, Komodo something, Kokomo, yeah. That's been changed for 3 times. Now think, let's think. Do you think he's still under business, yes or no? And it's a challenging business, okay? The cost is actually in a hospitality. I'll give you the cost. You actually will be spending 90%. It's one of the hardest industry. If lucky, it's a 90%. Most of the time in the beginning, this is going to be well over minus. Now, do you think he's in the business? Yeah?
I know you want us to say no, but everyone knows it's you.
Yeah.
So everyone does know me. Actually, that was me. Okay? Yes, thank you. I was thinking it's going to be a no, it's going to be something, but that's actually a yes. Like you do everything right. There's absolutely no stopping you. The only thing you don't do is get desperate for the dollar in the beginning, okay? And if you're starting a cafe or a restaurant business, it's actually one of the hardest industry to sustain and then to do well. 90%, let's say over 80% of a cafe owners or restaurant owners will go down within 3 years. By 5 years, they're already shut. There's like a really few people who've done well in a cafe and a restaurant. And then one happens to be me here in Darwin. That's it for me. Thank you. Have any questions? I'm happy to answer.
Yes.
Is he a millionaire or no?
Millionaire, yeah. Got a Mercedes now, got 2 cafes. Yeah. Thank you.
The diversification that you obviously did in the business to do it differently and stay successful?
So one was the cafe, and then started doing a coffee training, then started doing a coffee wholesale. So there was, over the period of time, it was planned from the beginning. I'll start with the cafe.
3 revenue streams.
Yep.
Yeah.
So that's why it's successful. That's why the costs are down. Any more?
And you managed to turn us off being your competitor.
That's it for me. Thank you.
I might grab that mic back off, you know. This is how he's a millionaire, he takes things. Yeah. that was great. I love the plot twist at the end. Fantastic. Yeah.
Did not go well, though.
Folks, that's it from us tonight. So much packed into that. Some great, thanks Ali, and thanks Prabin, some great presentations there from you guys. That was really, really good. Next week, our next event is it on here? Yeah, sales and marketing. Guys, that's the sexy part of business. Yeah. Sales and marketing, it's the art and craft component, if you like. Neil gets excited over this stuff. The Department of Colouring In, I think you could call it. But that's all next week, so you don't want to miss out on that one there. Same place, same location?
Same location.
Yep, so thanks guys again for your presentations, and guys, thank you all for coming here. It's great seeing you here again, and see you next week, next Tuesday. Thank you.